following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good 3-day weekend. Got the president speaking tonight, so everybody get geared up for that. I'm sure it'll be super important. And we got a little bit of movement in the S&Ps here, so we're going to get right into that. And we're going to talk a little bit about a couple of ETFs that we're going to track, and obviously quite a few stocks in the news, earnings announcements, and a couple of dogs maybe we can kind of hang on to on the short side in the midst of another bounce in the S&Ps. So let's just see where we're at here. And I did a little bit of more than a little bit of research on the S&Ps this past weekend. We're right back at that 2027 area, but we've had a kind of a mixed bag here when it comes to, I want to pull this up here. When it comes to, our breadth indicators, daily, weekly, we've been kind of mulling around here for a little bit. Excuse me. And at the same time, if you'll notice, we've had a pretty serious divergence developing here. I've been a little bit more bearish at times than normal, and that's kind of against the weekly breadth positive, which means that we're kind of on the imbalance side, the north side. But taking a look at this, as we look at lower highs on Navigator and actually crossing zero recently in this last daily profile in the S&Ps, this divergence pattern on the daily and actually on the weekly. And let me get our Navigator up here. I'm going to go in here to eSignal, and I'm going to add this because somebody had not saved my page right. Let's get that in there. Here we go. And there's our Navigator. Trust me, ahead of time, there's a divergence pattern that's set up here also on our long term. So as you can see on the weekly, we made lower highs on Navigator, kind of a trend line down, higher highs on price action on the long term. Still got that 1968 sitting there. And on the daily, we've got a very similar action. Actually had Navigator cross below our zero line here recently, and we're still below the zero line. And as we're bouncing up into this particular 2027 area, we're longs and shorts are kind of mixed up right now. But the long-term view and the intermediate-term view, you have to sell rallies on the intermediate view, and that would be the 2027 area based on everything we've just said. Now, any closes above 2027 on a daily, we're more than likely going to have these breadth changes on the daily back into positive. More than likely, we're going to have to see how the market opens this morning, but we've got the confluence of those two time frames pointing north again. So the good news is the 2027 area, after that being said, is going to have to really hold, and that's a decent leverage point. And considering that within the last S&Ps were definitely open yesterday, and we're trading around that 2027 area this morning, we've rallied from 1970 up into 2027 pretty quickly. So you've had the market come to you. You got a little bit of a mixed bag. You got some indicators pointing towards there's a divergence. And in my opinion, you've got a battle point there. You might be able to take some shots at it around 2027. I'm going to tell everybody to stop texting me while I'm on the show here. Hold on just a second, guys. Just do not disturb. That cures everything. Here we go. So after we look at the S&Ps, we got to take a look at gold. Took a hard look at this weekend, and as you know, if you've been watching this show, 1200, not going to beat that to death. Closed above, had to play the game from the long side, was happy to do so. and we actually made about 100 points on that trade with stops down below 1200, and then we were looking at the 1240s to regulate it. But we also got above our weekly on Friday. So we've had the technical damage finally happen to the shorts as this thing has come down over time, and we don't have any divergence indicators pointing in a different fashion. In fact, we had this cross above zero on our navigator, but at the same time we were closing above 1200, coming back and retest, move higher. So not to be a Monday morning quarterback, what do you do now? Well, I look back in time, 1295 into 1303 is going to be some massive resistance up there. We talked also about getting above 1250 as we did 2 or 3 days ago for another leg up. That was initial resistance as we saw that, but this 1295 into 1303 is going to be a serious level that we're going to have to get through, and that's based on some long-term profiles that were in force for quite a while from the past. Very extended profiles and very serious inflection points around 1295, 1303. So we've reached a high already today of 1294.3, and we may migrate a little bit higher, but remember that's going to be kind of a target. I'm not a big fan of shorting this product, so we're more than, ready to take profits, in my opinion, around 1295, 1303, and also waiting for some new information to appear. As you can see, the 240s regulated this trade north for a while from that break at around 1200. We always talk about, weekly takes precedence over daily over 240. And as we look at the 240s, we haven't had a lot of reasons to get out of this trade, excuse me, as we have climbed north. A little bit sick this morning, so I apologize for that. That's the situation on gold. Now, silver, we hadn't talked about a lot because this has kind of been a little bit of a laggard, but we did finally get a close above daily profiles here, 1735 on this particular contract, on the March contract. And now here's the weekly. So we've got some coincidental sympathy inflection points up here, about the same general rise area, a little bit higher, 1830 on silver as gold. So 1830 is going to be targets on silver. Not a big fan of shorting these metals at all. And that's the way I'm seeing this. And we've reached, let's see, we reached a high already today, 1804. So got about 30 cents left in silver that it could climb, and that would be on a relative scale with gold climbing about another 10 or 15 bucks to meet the top of that 1303 range. Let's see. We got to go back into the euro. Again, the gift that keeps on giving. There's really nothing, in my opinion, standing in the way of this trade. Any rallies you get in this thing, in my opinion, you got to sell. The recent short-term numbers on the euro, 116.50 down into 115.54, and we're rattling around down here. That Swiss franc news basically meant the Swiss were going to pull the bids on the euro, and the percent of the marketplace that they were supporting it, on a relative scale, probably wasn't that big, but it's just more damning information on the short side on the euro. All right, we're going to take a look at the yen. We're going to try to cruise through some currencies here. A lot of guys are trading currencies out there that we talk to on a day-to-day basis. Going to kind of cover that. A new profile on the Japanese yen. That big number for me always is right now 118.20, and we've gotten back above there. So targets right now a little bit lower, 119.55 on the yen. And again, not attempting to trade this on the short side, still looking at the long side on the yen constantly. We opted out on any of these shorts down here. This is more of a stop out for longs below 118.20, and now we're back above that line. And I think we can more than likely use that as a fence to move higher. But again, targets are a little bit lower this time, 119.55 on the yen. Let's take a look at the dollar really quick. This is, again, commodities would benefit greatly if this thing ever came off. But and gold is amazingly just, dollar decides to relax a little bit. Gold may really power up. But right now you've got inflection points trading above, close above last week, and now we're trading above the 92.76 on the dollar on the March contract, and we are looking at that right now, turning the rents the same way. This is our daily chart. for this to possibly move higher. But the good news is you know where to put your stops on that particular scene below the 92.76, and nothing on the weekly to glean information off of. It's still okay to be long, not okay to be short the U.S. dollar. And that has been since the breakout, that has been about a 1,300 pip move in the U.S. dollar without looking back, and zero reasons to try to go short that thing. All right, we're going to cover a couple of usual suspects here, the Treasuries 10-year. Then we're going to get into some stocks in a little bit. We're looking at the daily on the 10-year, a little bit of a relaxing move back here. We kind of plowed through recent highs at around that 130 area. Have kind of come back. Market's pretty strong this morning, pre-market, the stock market is. But as we look at these notes, remember, we'd like to have some new inflection points appear on the daily, and we're probably going to get those tomorrow. We've got an orange bar attempting to appear this morning already. We've used the 240s to regulate this trade, and the reason I'm kind of going through the process of the weekly, daily, and now in the 240s, we've got some technical damage on the short term for the first time, and we've come back and retested the bottom of the box. And remember, when a profile appears higher than price action, that's relatively bearish. So this is kind of a sit on the sidelines right now on the long trade on the 10-year. And we got to get back above 130.06 to get back in this game right now. We may actually pull back farther, but again, you got some new inflection points that'll probably appear here on the daily and get a new profile to key off of on that particular product. 30-year, guys who are trading that, again, similar situation, new profile attempting to appear, and that's bearish in itself. And you've also got some targets down below to still support this thing, 148.20. So I think this is a sit on the sidelines also. We may have some lower price action here on the 10-year and the 30-year, and we may be able to pick up where we left off on the long side pretty soon. We got to take a look at crude oil here before we go to break. 30 seconds. Again, this is kind of the gift that keeps on giving, but I did a little bit of work on the XLE this weekend, and I want to kind of bring that up in a relative sense versus crude oil. We're back trading below profiles. Kind of got a gift the other day, getting back about a $5 or $6 move up, and the top of that box was 50.39 a leverage point. We actually kind of blew through that a little bit, but never closed above. Did the key reversal, got back down. I actually got stopped out of the trade, but getting back down below 50.39 was kind of the green light. That was still okay to be on the short side for that product. We'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Staying in the theme of the stock world here, I just wanted to look at the XLF really quick. Had some banks obviously come out with some earnings, and also this environment has not been exactly what the financials have been looking towards, the flattening of the yield curve. So we're looking at this, and we're looking at the 2370 area coupled with the 2387 area, which is daily infra lows, weekly infra highs. As we hope we can get a retracement back up there. Markets rallied a little bit this morning, and we're trading 2357 pre-market. So if we can get back up into that couple of points higher, I think this is actually going to be a decent area to pick a battle on the short side. As you can tell, we've had some technical damage again on the XLF, and the Treasury environment seemingly on all-time highs is possibly putting this in the camp of okay to be short, not okay to be long. We went down and tested some numbers down below around 23. Let's just see where that was last week. 2306. And that was basically the bottom of our profile on the weekly. So we're kind of rattling around in the fair auction here. But again, a retest up top at 2370 or in that general neighborhood is going to be, in my opinion, a selling area with stops above, of course, considering this is not the ripest opportunity, in my opinion. XLV. Again, this is the healthcare section. This is the one that, again, stops below 69.47 coupled with 69.34. Unfair highs on the weekly, unfair highs on the daily. This particular section or sectors is showing its hand in the volatility of the broad market. This is something I'm keeping my eye on to actually move higher, believe it or not. Also, we're going to take a look at a couple of stocks that are, this one's actually news laden today, Johnson & Johnson. And unfair lows on Johnson & Johnson, 103.57. Kind of had a key reversal back up into the fair auction. That's going to be a leverage point on the long side, just to give some numbers on a stock that's pretty much going to be in the news today. And we're trading pre-market 102.83. So again, this particular stock now trading back down below profiles. Kind of had a little bit of a reversal Friday, and we're going to have to wait until that gets back above 103.57 for any type of long opportunities on Johnson & Johnson. Okay. Got a couple other stocks written down here. This is Charles Schwab. This is something, this is something that's had some serious technical damage, in my opinion. You got about the 28 area. That's been the breaking point on this last week, and we're trading well below profiles. Had the technical damage and to go back and retest on this. Don't see this actually getting any better, and any type of 240 inflection points on the short term on Charles Schwab, I think you're okay to kind of let the 240s continue to regulate this down, and that's SCHW. Got about a minute and a half here before we go to break. I want to pull up IBM. We hadn't talked about this in a while, and this has been something, looking at it from the long-term scale, this is our daily. We were kind of rattling down here below profiles 155.90. I think this is still a decent short, getting back down below 155.90. And if we get any rallies up into 163.09, I think that can be sold too. But right, if we rattle around the middle of the fair auction here on the IBM, you've got no leverage, in my opinion. So this is a trade below 155.90. Again, breakouts on the south side and 163.09 up top on IBM. We got to take a look at some of the bellwethers here that lead the market before we get a break here. Apple. Oh no, I typed in the wrong symbol. It's AAPL. All right, so pre-market trading 107.38. And we came down and hit that inflection point 105, and we talked about this last week actually. Waiting till 105.64 was possibly hit for a leverage point on Apple. That was hit. We're trading a little bit higher from that point last week. That's just 105.64 trading pre-market 107.42. So back in the fair auction, stops below 105.64 on Apple are probably in order here. And this particular stock, especially on a long-term basis, this is our weekly, is still the north trade. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Forgot to mention when we were actually got off track there when we were looking at crude oil, and forgot to pull up the XLE. Actually, had it in my notes, just didn't remember to do it. 74.18. We kind of had a little bit of a key reversal week last week. This is our long-term weekly view, and we did a free video actually on the XLE trying to buy the 74.18. Obviously, that went down a little too farther. Excuse me, a little bit farther than it was supposed to, I guess, with the concept of oil going lower, and this is on a relative scale hanging in there. Well, we're back above 74.18. I think that trade may be in order again, and I hope crude will bounce a little bit here to give this trade a little bit of a chance. But 74.18 again, stops oriented around there, and pre-market we're trading 75.12, and there's a couple of, in my opinion, internally speaking within the XLE, there might be some decent trades here going on. Here's ExxonMobil 89.49 coupled with that 89.66 area, and again we kind of made a little bit of a bounce there last 2 weeks ago. We talked about this too, closing still above, right, coming back, market kind of coming to you to those inflection points lining up. Scanner picked this one out, and I think we're still okay to kind of get back in the water on this one on the long side, considering that I think the XLE is going to possibly do some hanging in there situations. Schlumberger in the same theme. Very similar look to XLE. You got an inflection point there at 80.68 to pay attention to, stops below there. And you've got a new profile that's appeared on SLB, and you've got that 79.24 with 79.48 combined with the 80.68. We're kind of clearing above all that. We're trading 81.55 right now. So if you look at this, Schlumberger may be something to take a little bit of a stance on the long side here. And if oil just stops going down, I don't even know if it has to rally, but some of these stocks may have a chance to get a little bit of a trading bounce here on some of the oil sector stocks. I want to take a look at also DOW, Dow Chemical. Let me see where we trade pre-market here. 44.66. Okay, we're sitting right at weekly unfair lows on this. The market would definitely have to help this a little bit. The dollar's kind of killing this a little bit too. 44.82, getting back above there. I think you could use this as a fence. I like the action last week. And again, we could start having some technical damage for the shorts here on Dow above 45.03 combined with that 44, excuse me, let me just get the exact inflection point there. 44.82, 45.03. I like the setup on Dow Chemical, but we're going to have a little bit of a wait and see to see if we can blow off up here. Markets may help this if the market moves north, the market being the S&Ps, which you've kind of already talked about, that 2027 being a little bit of a leverage point, and we may, have a chance to use that as at least an intraday trading opportunity. But closes above 2027 on the S&Ps again on the daily are more than likely going to turn the breadth positive on the daily, and considering the weekly still positive, maybe time to sit on the sidelines on the short side for a while. And the reason I'm thinking all this, again, if you hadn't watched the beginning of the show, is this divergence pattern that has developed on Navigator over time and now crossing below zero on the daily on the S&Ps. Another stock I've been looking at, RHT. These are technical setups. They have nothing to do with earnings right now. Red Hat, based out of Raleigh, North Carolina. Here we go. 64.82 unfair highs on the weekly. New box attempted, was in force last week, and we're trading pre-market 65. So we're sitting right at unfair lows here on Red Hat, and also the unfair lows on unfair highs on the weekly and unfair lows on the daily. 64.94 coupled with 64.82. And we've kind of had the market come down to us, still in the long-term move up, and we've kind of come right into these inflection points lining up on two different time frames. So this, in my opinion, might be something to look at from the long side. APD, these are some shorts that I've been looking at. Again, I don't like the divergence here on the long term. This is the weekly. We're sitting right at a precipice here, but on the daily, kind of got below profiles, closed a little bit a couple of times before there. 140.70. We're trading 139.90 pre-market. 140.70 coupled with that 130. What was that? 139.25 unfair highs on the weekly. This is one that may drift a little lower. Pull this up, and I love how on the weeklies and the dailies, this has kind of had the divergence. Higher highs on the price action, lower highs on Navigator on both of those time frames. All right. Also, taking a look at ILMN. Rattling around, hanging in there above weekly unfair highs, 181.71 last week, trading 185 pre-market, and we've got, let's see here, bottom of the box 183.91. So this one may actually climb a little higher, but if we can get back down below that area and close below, all bets are off on ILMN. JWN, Nordstrom. This one's been hanging in there too, but again, I like this actually to sell off, JWN, and you got a leverage point here around 77.16 on JWN. We're going to take a look at grains really quick to switch it up. Take a look at corn first, and I read something this weekend they're putting in a bill to try to get rid of the ethanol bid in the marketplace on corn, and that's 40% of the market goes to ethanol production. And if you think that bill is going to go through, and I personally think there's a high percentage chance that will. They're putting it into action or putting it up for voting pretty soon. The corn market may just, this could be, God, a 70-cent reduction in corn relatively quick. You got to keep your eye on that. And in fact, I wouldn't be looking at the long trade in corn right now based on that fundamental news at all. There's the unfair lows, 379 on corn, and we could head lower, especially if we get a close below 379. There's a lot of corn out there at the same time, and that would just be a glut in the marketplace. Let's take a look at March soybeans really quick. Talked about this the other day. Talked about targets down below 983. We've met those. We're sitting right there. And here's the daily situation. Technical damage on the daily. It looks like this thing to me may head lower. And let me see where we're at here. On soybeans, I think you've got a leverage point now. Hope we get a rally back into 997, around $10 a bushel. And this thing may rattle around between 983 and $10 a bushel for right now, but I think this thing is generally going to head lower. Excuse me. And while we're talking about all these grains, we got to take a look at wheat really quick. Close below that inflection point on the weekly on wheat, and that inflection point is 536. Started breaking down technically below that 581 area first, and wheat's a little bit different animal, but I like the way on the short side that this has just continued to find no bids, and now we're trading below profiles on the weekly. You can use that, in my opinion, as a leverage point still, that 536 area on the short side, something to lean on. All right. Let's see. Can't type this morning. Got a lot of calls about this for some reason. Twitter had that, a little bit of a technical, and this is, just kind of a broken record situation here. Close above, technically causing some damage for the shorts. Really thin profile. Going back and retesting after the technical damage on the north side and then powering up. But now we got a new profile. We're trading below, and that inflection point, in my opinion, now to continue the short trade down on this particular stock, Twitter, is 37.76. Pre-market, we're trading 37.65. So this may be something to keep on the radar screen from the short side. Still, Tesla, got to take a look at that. All right. This is the situation on Tesla. We had a close last week below that 200 area. We talked about trading this from the short side, continuing to trade this from the short side. But new profiles appeared last week on the daily, 187.98. Let's just call it 188. So you've got a little bit of a trading inflection point down there, 188. That's to be looked at to retrace back up into 200. So we may have a little bit of a bid in the marketplace temporarily in Tesla, 194.25 pre-market, and you got 200 up top. So we could bounce around down here for a little bit in Tesla with a little bit of a floor at 188. Okay, going back into currencies. Talked about trading the ruble only from the long side, which is the devaluation of the ruble. Still 59.10 sitting there, no new inflection points. And if you're trading the ruble, the short-term inflection points to move higher, 64.30 and breakouts above 65.5 are to be bought on the ruble. Well, the devaluation of the ruble. We had that big Swiss franc news last week. We talked about that. We kind of did about a half a show on the mechanisms of that trade. There's been even more fallout if you want to see the Forex firms that are kind of still having issues with that, and new ones that are popping up that haven't disclosed the problems in their firm. I'd advise you to get on the internet, take a look and see if the currency firm you're using is within those lists, and start looking a little deeper into this. Even though you're not trading the Swiss franc, that may affect account holdings at some of these firms. Let's take a look at the DAX. Weekly on the DAX, when using the raw contract, 10, 1, 2, 3 above those unfair highs. Here's the daily situation on the DAX. Climbing higher, the devaluation of the euro is obviously helping this trade. Short-term numbers on the DAX got a floor around 10,070 down here. A lot of guys were asking me about this. I mean, the good news is, I think, as we blocked out one side of the marketplace, it's still okay to be long and not okay to be short this particular instrument on the DAX. Let's go back into gold. 2 seconds here. Again, we're coming off just a tad here, and we may have reached that general area, 1295 into 1303. If you've been long gold, it may be time to just sit tight for a little bit, since we have actually touched that particular area. Yeah, Mark, I'm trying to read. You guys are pounding out text in the den so quick I can barely read them. I appreciate the comments, but yeah, the DAX is, everybody's traded this thing. Ultimately, when you've got a futures account, you end up migrating over to the crack every once in a while. That being the DAX, and I've traded the DAX a lot in the past, but right now, in my opinion, there's no reason to come in here and try to be the hero and pick the high print on the DAX to short. You really need some technical reasons and confirmations for, stepping on the other side of the trade on this. And I still think it's okay to be long, not okay to be short on the DAX. And that's my opinion on it. Let's just pull up some NASDAQ numbers that some of you guys are probably taking a look at the NASDAQ. And pre-market, 4160. Here's the 240 resistance, 4175 on the short term on the NASDAQ. That pretty much coincides with that 2027 on the S&P futures. A little bit higher here, but we've talked about this and the divergence patterns on the weeklies and the dailies on the S&Ps, and that 2027 area is going to be a big area. Current PSC on a very wide box and former unfair highs on the S&Ps for this to be used as resistance with stops above. And if we migrate north a little bit farther in 2027 and we get back down below, I still think the leverage is possibly on the short side on this particular instrument based on everything we've already talked about. We're going to be right back, folks, after this next break. Try to sum up things before the market opens. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Just trying to get something organized here. Okay, here we go. All right. Taking a look at BHI, let's just look down the list here. Baker Hughes coming out before the market opens. Obviously, it's good news here, 57.60. And again, we hope this thing climbs higher into 60.15 on BHI, Baker Hughes. Hopefully that'll give us a shorting opportunity again. We're, again, been technically damaged for a while. And, excuse me. Got a little sick this weekend. A couple other things coming out. COH. This is pre-market. And again, these are things we hope climb a little bit higher. 36.71. Trading pre-market at 36.45. So again, we may have reached a little bit of a top here in COH and a trading opportunity there. And that's also in consideration that we're looking at the S&Ps at a little bit of an inflection point after a pretty decent move up the past 2 or 3 days into 2027. So hoping we get a little bit of a beta relevance here on Coach. All right. A couple of things that are coming up pre-market. Halliburton, HAL. And we talked about this, along with and here's Halliburton. Why is that looking like that? Hold on 2 seconds, guys. Okay, so obviously oil making lower lows, XLE not making lower lows, and Halliburton not making lower lows. You've got an inflection point there, 39.29, and up top 43.45 on the long term. We're trading 40 pre-market on Halliburton, and we've now eclipsed and possibly will close above that 39.37 area on the daily. I think this might be a trading opportunity. Obviously, you can put stops below based on your appetite for risk. This is a really thin profile down here below 37.84 is the way I'd like to look at this as a longer-term play for this to possibly move a little bit farther north, and a decent little trading opportunity on Halliburton with some pretty, fair risk-reward scenarios, in my opinion, on that particular stock. General Dynamics, GD. All right, we're trading 140.09 pre-market, and that's obviously getting back above the daily profiles here, and I think this is okay to be long, not okay to be short, General Dynamics. And again, you can orient some stops around that 139.17 for traders on an intermediate view on General Dynamics. Let's take a look at Netflix. Netflix coming out after the close today, NFLX, and pre-market 342. Here's the situation on Netflix. We're almost up into that 345 area, top of the box on Netflix. The daily situation here, that would, in my opinion, well, sometimes Kramer tells people to do things before the earnings comes out, but I think you just need to sit tight on this one. And if we have some technical damage and the news comes out on Netflix and we're migrating a little bit higher than 345, we may have a little bit of a short squeeze in this. And that's the way to look at it. I think breakouts above 345 have to be bought, and breakdowns below 334 have to be sold on Netflix. Right now, we're just still in the fair auction here, trade 341 pre-market. And again, Netflix after the close today, that might be a wait and see, folks. Thanks very much, guys. Steve Rhodes is next. We'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.